Hello traders, welcome to the weekend market analysis. This is Mike Hamilton from Trade the Easy Way, and I want to talk you through what I'm seeing in the Dow first on the daily charts. This is very flat. This is, you can see, it doesn't take much imagination to see that we are right in that apex, tucked away, threatening to break up. So very little data on Monday. The big item of the week is Fed rates on Thursday. Are they going to raise them or not? Problem for us as traders, as it's 2 hours from the end of trading on Thursday, so and we've got triple witching on Friday. So based on what I'm seeing here, I'm seeing a market that has dipped down and come back to this resistance level and looking as if we are wanting to test 17,000. Now in a bear market, you're not, as you and I know, we are not going to go just straight down, up and zunk. We are going to, typically in a bear market, they will send you to sleep. They'll make you, the market will do its very, very best to forget we're in a bear market, and it will creep up and up. Potentially, this is a scenario, not a recommendation. Up and up and up, and you'll think, oh wow, that's it. All this is over. All this selling is over. Market's nice and happy, and then it will reach resistance or one level of resistance, and then wham, you'll get the move. So that's what I'm expecting at this stage. If I switch to the weekly, and you can see these fibs I've got on here are taken from the, let me just pause a second. Sorry about that. They are taken from the 2011 low here, 10,400. So the markets, we've had had a long ride up. QE gets announced in the US. So we have 1, 2, 3, A, B, C, and then we eventually get a D wave move to the upside. So then we get all this pullback down to your support level down here, and they start to build it. 1, 2, 3, 4, 5, A, B, C, D wave. 1, 2, 3, 4. I'm not doing this very well, am I? 5, etc., etc. Then we get the distribution pattern. Actually, that's not very. That fib isn't taken very well up there. Let me just do that again while I've got you on the screen. Right down to that 2011 level, drag it across, and you can see we're tucked right underneath that fib level. Okay, the SAR, parabolic SAR, stop and reverse, is what SAR stands for, is 17,140. So it's basically automatically picking up resistance levels, but all the time you're under the parabolic SAR, then the market is short. So unless we close above 17.5, I would not entertain any long-term longs in this market. Okay, so could easily come and test that 17,150, 17,250, that kind of area. However, we are in a bear market. This could just so easily, you know, attempt to creep up through that 660 and then roll over, which is why this is a little tough to predict. The bottom line is it's a higher close on the weekly. I'm not trading on Monday. I'm going to wait and see what Monday gives us and then take my cues from there. But what I don't want to do is get short at the lows. I want to get short at the highs. If you are going to short, you need to short as high as you possibly can. Okay, so that's the Dow. And that's back to the daily. Now across to the DAX. Obviously DAX closes before the Dow, and so we may see a bit of an uptick in the early part of the week as this catches up with the Dow. Very similar story. The MACD has been extreme. There's the extreme reading in the MACD. We are attempting to, the bulls are trying to drag this up. We're in an apex, but under the 20 EMA, and this actually has triggered. You can see this blue parabolic SAR. So that's actually telling you we pierced a resistance level, which has triggered the blue signal, the buy signal for the stop and return indicator. So the SAR is telling you, the stop and return indicator, it's telling you to buy this. And of course, if we start breaking above here and closing above here, then we could come and test this resistance, which will be a lovely place to think about a short, but the 200 EMA would be even better if we get it. Alright, now to cut a long story short on Forex, the only charts I really like is actually the euro. I didn't think I'd be saying this because I made the silly mistake of trying to buck the trend. Thankfully I only took a small position, got stopped out and missed an up move. But this euro US dollar is closing not only, it came down here to test the fib level. So what we've got here is we've got a 1, 2, 3, 4, 5 wave to the upside. Then we've had an A, B, C wave correction. So we're in the midst of a D wave push, having bottomed out here in the middle of last week, closed higher on Friday. So now a pullback to 11300 is a buy area to see if we can test at least 114750, 115, this kind of area here. The parabolic SAR is picking up a resistance level. It's a neat little instrument. The indicator, sorry, SAR, parabolic SAR. So just have a look at that. The one I think is even probably slightly better here is the euro yen. Again, fibs I've taken from this high on December last year and the low at April this year. I would try and hold out for a retest of Friday's low. Even better, 135. That's a 170 point drop. It's a nice bullish chart. Closed above the 200 EMA, closed above the fib level. And you can see if we've got triple witching, it's possible that they may take it to 140 by Friday. But we've got US rates in between. So let the market unfold and see where we are. But stick to the charts, trade what you see, because the market at the moment is appears to be willing to hold up. Down to the pound pairs. The pound was a very weak close on Friday, and you can see we've got this resistance of 156. Well, more localized resistance with this 200 EMA at 155. We could just roll over. We're in a downtrend. We're range bound. This is where are we? I think this is the January. January starts here. Yeah, this arrow is the January start. We dropped off right in the first week of trading in this year. Created a three-way reversal pattern, broke up, pulled back, broke up into resistance, and this level has been a wall, a major barrier ever since, and this has been the support. So we're in a big box. Okay, so I'm just sticking with the euro yen in the early part of the week. Pound yen, not much better. We're opened and closed under the 200 EMA. Okay, stocks. Right, moving on to stocks. That's enough of Forex at the moment. And stocks. This is LEN. a building stock, a house builder in the US. I got short at 53.10, literally on that resistance level, and Thursday, Friday we've pulled up. So I've taken half off at the round number 50 because the markets love round numbers. Massive area support. So I'm half position short with a stop just above my entry. So I've got taken half profits and I've got more or less stop to break even. Because I'm just going to, I would love to get short up here at 54, assuming it gets up there and I get a signal. Okay, so I'm looking to short the house builders on the basis that at some stage the US have got to raise rates. Now, whether that's this month, this year, spring next year, summer next year, who knows? We do not know this at the moment. All we do know is rates are practically zero and there's only one way they can go. It's all about timing. So timing is one of the key factors in the market, and that's why we need to be very patient. MTH, Meritage Homes, same strategy, same scenario, only problem is this, I was looking for a higher move and it gapped down and engulfed the price action after that gap. So it's held up having after the day after the gap. So I'm keeping tabs with it because I would love to see that get back up to 41.50. Rates, I mean, if the rates are put on hold, then these housing stocks could get a bit of a shove to the upside. So I'm just going to be very, very careful. Oil at the moment is just holding a major level just above, just underneath 45 bucks. And the oil stocks, this is rig, something I'm keeping an eye on. You can see that the momentum to the downside has stalled. Nice steady run down to the run down. Parabolic SAR catches it, and then we get divergence, which can sometimes indicate reversal, can sometimes just mean a pullback. At the moment we are holding a 20 EMA and looking as if we want to go higher at this stage, but it's not very convincing. Just come back to that parabolic SAR for a moment. Look how it, once we break a support level, parabolic SAR turns red. As the market approaches the parabolic SAR, it finds sellers in line with the 20 EMA. So the 20 EMA and the parabolic SAR is a great way of just making sure you stay the right side of the trend. And if you use, one of the ways you can use a parabolic SAR is if you get short up here on a signal, and that was a key area of resistance up there, you can use this as a stop. This is a great way of keeping in a trade, in a trend. You can see as the market drops, had you used the parabolic SAR, you would have stayed in it right until down here, until the 28th of July. So you get a big seller's bar up here on the 14th of May. The parabolic SAR doesn't break, doesn't stop and reverse until August 3. Gets a push to the upside, and then of course it legs it down again. So cut long story short, I am not trading that at the moment. This had some nasty selling on Wednesday in line with the indices, and it's just holding its own at the moment. It's a potential W bottom. We have divergence down near the MACD. We have had a push up to the upside, pull back down to a decent level of support from here, and we are trying to hold but could just roll over. What we might find is this one gets towards the trend line, resistance level, and gets another leg down. So I need to be careful with these ones. Let me just look through the oil list. Let's look at Schlumberger. Ooh, not very good. Let's pick another one. I was looking at Conoco, COP. That's closed under resistance. So threatening to pull back down to that support level 43.50. What's another good one? Let's look at Diamond Offshore. Not bad. That's quite a downtrend, quite a significant downtrend. So I'm steering clear. Let's just look at some bellwethers. Let's look at Rolls-Royce in the UK first. Yuck. Certainly some divergences down here. If Rolls were to close above 740, I would buy into that. Lloyds Bank is sideways, I can see from the price. Barclays is leaping around, isn't it? It's leaping around, not great. BG, messy chart. What else can I find? Telford Homes, let's look at housing in the UK. So Telford Homes, after that rate hold, is putting in a buy signal. 408 is a buy signal. Would I buy that? Yeah. Can't ignore a buy signal. Well, you can if you choose to. Has that got the potential to break out? I don't think so. I mean, we're in a bear market. I would actually just sit there, wait and see if that came up, and then look for some sell signals at that level. Because if you notice, yeah, a couple of nice pushes up, fine. There's a lovely sell signal, pulls back, sells, pulls back, sells, pulls back, sells. And we're just in a pull up. So we've had 1, 2, 3 decent legs down. The pushes down are faster and harder than the pushes up. So let's wait and see if we see some short covering and the bulls attempt to drag that up, and then we can sell it. GFRD, same story. That's very, very attractive chart up there. Give that another day or two. I mean, if that closes above Friday's range, sorry, closes below Friday's range, I would want to get short that, because I think the potential for these housing stocks to drop is incredible. Comes out of that apex, and I think that'll drop hard. If I've got this wrong, if I am really, I've miscalculated what is going on in this market, and this is going to pull up and run, then I'm happy to just stand back and let it go. But yeah, I am just trying to get prepared for shorting this market. But I will be prepared to change that view if the market proves me wrong. I'm just looking at BP here. That's an awful drop. Horrible chart for any bulls anyway. Great for the bears. Okay, let's look at some US bellwethers. So I'm not coming up against any kind of decisions and great charts at the moment, so I obviously need to do a lot more scanning. Bank of America, let's just look at bellwethers. Very, very similar pattern to the indices. Potential bear flags. Facebook has pulled up. It's a lovely stock. It could go further. Would I buy that? Yeah, I would buy a pullback to 90.80. All right, I'll leave there and try to do some more scanning. I will do some more scanning on Monday. Traders Roundtable is, as usual, 7 p.m. We'll be looking at the bigger picture. Just going to sit back and look at the bigger picture and just talk about potential moves and influence on the main forex pairs, particularly obviously the dollar, and impacts on stock sectors. The Scalper School is going ahead. If you're not booked, this is the last call for Scalper School. Scalper School is potentially going to change, it should change the way you come into this market. And it's not just for scalpers. I'll be looking at a technique for a way of hedging a bigger position using scalping. All right, enjoy what's left of your weekend and see you in the Traders Roundtable on Monday.